Ron, these markets, what is going on?
You know, it's interesting times. Shall we live in interesting times? The old Chinese proverb. I think what you're seeing is you're seeing a shift in the markets. We have been in an environment of low interest rates, low inflation, and low growth, and that has promoted passive investing, high PE stocks, and now we're going to change. You're going to get higher growth, higher interest rates, and the market's going to be more volatile, and it's going to be a stock picker's market.
Yeah, what does it mean to some of these hot areas? I think it's a very good point. I mean, look at FANG. I mean, it's getting routed these right now.
Well, it is. Well, a couple of things. I mean, first of all, you're looking at the specter of regulation based on what's going on with some of these privacy issues, but fundamentally, those stocks do well in the environment that we're exiting, which again, low interest rates and low growth support stocks like that. And as we change, they'll be relatively less valued.
What does it mean to the average investor who's bought these stocks, these high volatile stocks? What do they have to do now? How can they stock pick? How can they survive this environment?
I think they'll do fine. I am a believer that we'll look back and this period will be reminiscent. You know, history repeats itself, right? This period will be reminiscent of the Nifty 50 of the 60s, when everyone just said own those 50 stocks. And everyone owned them, and then, of course, if everyone buys everything, valuations tend to get up there. What investors need to do is to understand what they own, understand how much exposure do they have to individual stocks, and the way to understand that is get an advisor.
Sure.
I'm talking my own book.
Or some are Stifel stock research, right?
Well, you know, or definitely some of Stifel stock research.
Where you've seen so many cycles. I'm not, you know.
I've been
Stifel
around
since 1997. You said I wanted to tee it up for you.
Yeah, I've been around a while.
What cycle are we in the market right now?
You know, a lot of the markets have changed again. You can look back and say maybe in 15 we might have had a recession. If you look at industrial production in 15, I think we're in the middle innings. A lot of people feel we're late in a cycle. I don't feel that we are. But we are going to enter a period that we haven't seen in 10 years, which again is coming out of the financial crisis and an environment of rising rates versus declining rates.
Are we back to that environment? Maybe I'm dating myself now for a little bit. Fearing the Fed? We haven't heard that in a while, but now are we back there?
You know, fearing the Fed's got a tough job. Many of us, we think, but when I think about the Fed, I think the Fed's an environment where they have to sort of stick the landing, to put it in gymnastics terms, because you have employment below 4%, GDP growth going above 3%, and the Fed trying to tap the brakes while the fiscal policies are adding stuff to the punch bowl, so to speak.
Sure.
So the Fed's got a tough job. If the Fed does not handle this correctly, yeah, you should fear the Fed. Bull markets don't die of old age; they're murdered by the Fed.
That's pretty good. Switching gears a little bit, I really want to talk to you about the M&A environment. It is hot. What is going on? You are a key player in this.
Look, the M&A environment is hot because, again, look at financials. You know, that you just want to talk about financials and what will happen. Consolidation is going to occur in financials. That's going to be hot, and regulation when they remove the $50 billion threshold for SIFI, which
so
they're going to do.
Consolidation in the financial space.
Yeah.
I haven't heard that.
Oh, sure, sure. You've not seen a deal creating a $50 billion organization since that occurred. That will change, and so you're going to see consolidation there. You're going to see consolidation in technology. You're going to see consolidation in healthcare. But you know, in my career, M&A is always a factor.
Are you an acquirer in this market? You've essentially built Stifel from the ground floor, acquiring so many stock research platforms, great businesses. What interests you right now?
We're always interested in anything that makes us more relevant to clients. When you look at our growth over the last 10 years, it's been phenomenal. We're up. Our revenues are 4 times higher than they were in the financial crisis. Where we cover a lot more stocks, we do a lot more institutional business, we raise capital, and we advise almost $300 billion for our clients. So we're just a more relevant firm. Looking forward, I'm always interested in adding to our firm.
Fintech, is that of interest to you guys?
Fintech is of an interest. We believe that fintech is mobile and digital banking is going to be very important. I, for one, believe that digital banking will be more prevalent than branch banking going forward, and fintech is going to be a big part of that. In many ways, we are a fintech.
Oh, interesting. What do you see? After you look at you have the Qualcomm Broadcom deal squashed by the administration. What does that mean for the M&A market? Is it as bad as we're hearing out there?
No, I don't think so. That deal was being looked at for national security issues. I would think that the M&A environment, regulation, and all that is lessening, not increasing.
Mm-hmm. And then, just lastly, in terms of hot spaces, healthcare, is that as hot as everybody's making it out to be?
Healthcare is very hot, and the intersection of healthcare and technology is going to be a hot area going forward. When you think about the number of things that you're going to be able to understand about yourself via technology, and marrying technology and healthcare is going to be a very hot area in the years to come.
Feels like we haven't reached the top yet, then.
Well, we never reached the top in a growing capitalistic economy. The markets go up, GDP goes up. Why do we have to reach the top? Sure. It's not a zero-sum game, okay? It's not, capitalism is not a zero-sum game. So we will ebb and flow, but we'll have higher highs and higher lows, which we've had in my career.
Sure, I love writing about these deals. Switching gears a little bit,
right.
Stepping back on Stifel, what has been the secret to your longevity? Please share with everybody. CEO since 1997. How are you getting it done? I mean, this is pretty intense business.
It is an intense business. This is a good question. How do you get it done? Well, first of all, until you mention it, I guess I really don't look back on 20 years. It's been a while. It's a simple business if you keep it simple in terms of good people with give them an entrepreneurial meritocracy, and you can build an organization. We've grown Stifel from $100 million in revenues when I joined to $3 billion, a market cap of $40 million to $4 billion, give or take. And the single correlation to all of that is our growth in people. We've gone from 600 people to over 7,000, and so Stifel is a collection of some very talented, very good people.
In 1997, you first started. Did you have a vision for what you're seeing today?
I'd like to say that I foresaw all of this. Okay, I didn't see any of this. All right. When you look at 97, we started with the Russian crisis, and then we went to the tech bubble, and then we went to the financial crisis, and now we have taper tantrums and flash crashes and a number of things, and I foresaw none of that.
Where does that happen? I mean, I think it'd be fair to call it the ultimate deal maker. Some of these research outfits, increasingly bigger deals. I mean, how do you just get these things done? I mean, how do you find targets? What are you looking for out there?
I look for good businesses and good people. All right, and if we find that, that's been the secret to our success. And and Stifel's uniquely positioned right now because being a research stock, which we are, we lead with research. We believe that research is fundamental to what we do. But when you look backwards over the last 5 years, it's been tough to be a research because everything's correlated. Yeah. That's about to change.
What is, and let's tease it up, as an old school, as an analyst, I used to be a stock analyst, what's the future of stock research?
You went from stock analyst to this?
Yeah, go figure, right? Well,
right?
Hey, now I'm in charge, all right? So it's pretty cool, yeah.
Good.
But what is the future of stock research? It's getting a bad rap, some of it's gotten commoditized. Where does it go?
Well, again, our analyst recently said that, you don't invest in acronyms anymore, you invest in individual stocks, and so I think there's a huge difference in the fangs between e-commerce and e-media. That's what research does. Research will pick out the difference in business models and will help differentiate business models, and you're going to see some separation here, and stock picking will help you make money.
Sounds like a nice opportunity to stay on the deal hunt.
Well, it is. It is.
Yeah.
And, you know, people always ask
Sorry,
me.
I'm thinking I'm in spreadsheets right now. I'm sorry. Yeah,
You can think spreadsheets, but you know, the real question about why Stifel grows is a good question, and it's something I like answering, because people will say to me, you know, where do you get the fortitude to do deals?
Yeah.
You know, where do you do deals, and why? And my answer is I'm very optimistic about long term, about our country, about our economy, about our markets. And so you will build a company that can serve those. And if I'm wrong and the world comes to an end, come find me.
Well, at least we finished on this interview.
Yeah, right.
What does the next 20 years in Wall Street look like?
You know, the next 20 years of Wall Street, it's a great question, because I look back to the last 20 years and I look at the changes that have occurred, but some things remain the same, and that is that Wall Street, properly functioning, takes investors' savings and transfers it to entrepreneurs. That hasn't changed, not in 20 years, that hasn't changed in a century. What Wall Street has to do, though, our number one mission on Wall Street, I believe, is to get back to investor trust and confidence. We've done a lot of things as an industry to lose that through all the scandals, and I think that Wall Street's challenge is to remember that we are the fulcrum between savers and people who need capital.
Yeah.
And that's a trusted position, and I think our industry is will rebuild that confidence.
What about the culture? How do we get it improved?
The culture is something where what happened was it was all the partners' money, and they acted as owners and became other people's money through big financial institutions. I think people are going to get back to understanding the importance of clients and clients' relationships. I'd like to think we've never lost that.
Mm-hmm. But the long nights are still, I mean, you still got to put the long nights in if you want to get ahead in this business.
Of course.
Yeah, absolutely.
In any business.
Yeah, it's true. And lastly, what's your outlook? What's up for you next? How long could you see yourself doing this?
Personally?
Yeah.
You know, I feel I'm late 50s going on early 30s.
Mm-hmm.
I'm going to be around for a while.
All right, well, good stuff, and congratulations on all this growth. Good stuff.
Thank you.
Thank you.
Thank you.
Thank you.